Hello, and thank y'all for joining us again today. Today, we are blessed and honored to have Bruce Fain with Turtle Creek Financial Group. Today is the third part of a six-part series. Before we go into that, Bruce, how are you doing?
We are doing great. How about yourself and the McGraw Council?
We're doing great as well. Thank you. We're super excited. We're continuing to grow our reach and expand that. We're in almost 15 different states now, over 500 members. So a lot of people are going to be able to see what you're presenting here today. So thank you for taking time out of your schedule to share your knowledge and insights with us.
I guarantee it's my honor to be here. Thank you so much, John.
Fantastic, fantastic. Well, I believe you have a PowerPoint. Are you ready?
I am ready, John. Thank you.
Fantastic. We have it up on the screen. The floor is yours, my man.
Thank you. Good morning, everyone. And again, we're going to talk a little bit about economic reality and your personal economy. And today, what we're going to talk about is how much is enough. And we're going to do that with regard to income replacement for the survivors, because we are in the business of business series, but there are some serious questions that have to be asked. And we're also talking about putting money to work. And today we're going to talk about putting to work money to take care of survivors if the unforeseen happens to the breadwinner. And so possibly the most common question people ask themselves or their advisors relative to life insurance planning for family protection is, how much is enough? The primary role of life insurance is income replacement, income for survivors at the premature death of a breadwinner, or income replacement for an individual when they are too old to want to work for income. There are numerous formulas and software programs available to calculate life insurance death benefit requirement based on stated objectives. However, before any of these may provide meaningful answers, another question must be answered first. What would you like to have happen? The sole purpose of personal life insurance survivor benefits is to allow individuals to keep commitments made prior to their death. There is no right answer to what those commitments might be. All those answers are personal. What would you like to have happen?
Can I jump in with a quick question, Bruce?
Absolutely.
Can you elaborate on a little bit why life insurance is the example here?
I'll tell you, because I can't think when we've gone through this, because we've done this for over 30 years, life insurance has a couple of key ingredients that people need to understand are contractually designed to take care of this specific thing. When you talk about putting money to work in a contractual situation, only the insurance companies out there, the life insurance companies out there, have the money necessary to pass on generational wealth first. But second, it also has the National Association of Insurance Commissioners, professionals, regulations to take care of guaranteeing what your wishes are, and those funds are available for that generational transfer of money. Does that make sense?
So oversimplified, it's massive credibility.
It is massive credibility, and it also, you have to put in there, you can't understate the fact that they have tremendous wealth and financial stability. I mean, because when you talk about NAIC, or National Association of Insurance Commissioners, what that is, it's a national group, but all insurance companies are interconnected. So from the smallest insurance company that you have in whatever small town to the largest in the biggest city in the biggest state, they are all interconnected. And what that means to your clients is that if something were to happen to the insurance company in your small town, they would have a board that would come in the NAIC and say, okay, we're going to administrate premiums being paid and take those in. We're going to also administrate benefits going out, whatever they may be, whether they're income whether they're a disability or their life claims. And then another insurance company, not the government and not bankruptcy, will come in and take over that book of business and absorb that and make sure that those clients are taken care of going forward. And that's why we're using this example, because what we want to do for not only our business owners, but their survivors, is make sure that the contractual agreements that they make, especially when it comes to something this personal, is guaranteed to make sure it is actually going to come to pass and be instituted like they want it done. Does that make sense?
100% makes sense. Thank you for clarifying.
Yes, absolutely. Thanks for the time to do that. Thank you for the question. Family income replacement. A common term or reference in life insurance death benefit discussions is the need for life insurance. Inexperienced agents are guilty of pointing to the need for life insurance. That is simply an untrue statement. No one needs life insurance. People die every day without it. Life insurance is not needed to die. The much more relevant question is how much life insurance one may want. And that leads us back to the question of, what would you like to have happen even if you are gone that would have been provided by your income? Are there things you'd like to have happen for your spouse? Are there things you'd like to have happen for your children? Would you like to be able to maximize retirement income for you and your spouse? Which concerns are short-term and which ones are long-term? In some instances, individuals want their life insurance program to replace all or a portion of their income for their family for some period. This might mean the remainder of their working life. It might mean until the children are grown. It might mean until the children are grown and through college. It also might mean income for an adjustment period, meaning 2 to 20 years. As a starting place, we'll consider the general underwriting guidelines for the maximum amount of life insurance available to replace one's income from their current age through the remainder of their working life. And we look at it in that increment, income replacement with multiples of income required in capital. And what we look at is people age 30 to 39 need 25 times their annual income to replace their working life income. Ages 40 to 49 is 18 times their annual income. 50 to 59 is 14 times their annual income. And 60 to 65 is still 10 times their annual income. So let's look at that. There's an example: head of household, aged 45, annual income is $85,000. So the income multiplier for income replacement capital would be 18. Total capital required to replace that income would be $1.5 million. Now, that $1.5 million is total capital required to replace 100% of future earnings. This is not necessarily a need for $1.5 million in of insurance. It means total capital available for income replacement. So the survivor has income capital sources, and what we're going to look at is the weighted for those sources, weighted for fluctuations and income tax due. A bank savings has no risk of loss, so it's weighted at 100%. Your stock portfolio, because it has a fugitive future, meaning the unknown is part of it, because obviously the stock market fluctuates. So they only weighted at 60%. Your 401k and IRA, similarly, net balance is weighted at 50% because it also is market based. A fixed annuity is weighted at 100% because there is, again, no risk of loss. And an existing life insurance policy, obviously, has no risk of loss. So that also would be weighted at 100% of value. So capital required is still $1.5 million. Bank savings weighted for a savings at $200,000 would equal $200,000. Your 401k balance would be is 300,000, but would only be weighted at 150,000 for this example. Existing life insurance, a $250,000 face value would be weighted at a resource of 250,000. So total existing capital available for income replacement would be $600,000. Additional capital that would be required would be $900,000. So you can see how looking at this through the prism of all you have available right now as sources all come into play, but they all have different weighted values to look at going forward.
Can I jump in with another question here, Bruce?
Absolutely.
Can you elaborate a little bit on some of the nuances of being a small business owner in this scenario? Because I know that they're being a small business owner and kind of merging the assets between a business and an individual. Sometimes it's a little different when you're trying to get something like life insurance or even a mortgage. What are some things that the small business owner would want to know or would need to do to kind of counteract some of those potentially negative impacts?
Well, one of the things that you want to do, you want to look at, we looked at buy sell and we're looking at income replacement. One of the things that you want to do when you look at this is inside the business, if you do a policy such as this inside the business, not only can you mitigate some of the taxation situations, but you also can mitigate some of the cost associated with it from a personal perspective. But when you look at it as an income replacement, if you look at like the 401k and the stocks, a lot of people, that is their income replacement.
Right.
Okay. And let's understand that I think assets under management are a good thing, but they have their place. So when you look at those things, they are not, and this is the hardest thing for most of my clients to understand, and it's a great question on your part. Those assets under management and the growth and shrinkage that they get over time, when you do that, you are not putting yourself in a retirement account situation. You are actually putting your money at risk. When you make this contractual agreement that we're talking about now from a small business owner, you're putting money to work that's guaranteed and designed to take care of the things that we are talking about today, which is income replacement. And that also can help as a benefit to those survivors of the person that may have been in the partnership that is now gone. And it will soften the blow in that interim when those, how do I want to put this? When the buy-sell situation has to take place, that takes time. It doesn't happen tomorrow. It could take anywhere from 6 weeks to 6 months, depending on how complex the business is and how big the business is and what the buy-sell agreement looks like. I mean, there are different ways that they set these things up. And if you don't have anything in place to replace income in the interim, because this honestly will take place almost immediately. I mean, you can, and we're going to talk a little bit more about this, and it may answer some of the questions, but have I answered any part of the question that you're asking me?
Absolutely. No, 100% makes more sense. No, thank you for clarifying that.
Well, there's a couple of more things that I think will come down this valley and maybe answer a little bit more specifically in later slides here in this presentation. So stop me again. Be my guest. Thank you. Okay. Another method of calculating life insurance income replacement death benefits is specific objectives. And John, this may be right down the alley that you just asked me, okay? So stop me and give me a little input or feedback as I go through this. With this method, we look at specific things that would have been financed for your income and that you would like to see accomplished, even if you're no longer here. Some examples are pay off the mortgage, fund higher education for the children, provide a transition fund for your spouse and purchase, it could be anything. We're using a vacation property here, but there are different things that people like to do. But those things are very personal again. So specific objective funding is very personal. What would you like to have happen? A, B, C, any order and priority that you have in your personal situation. With dual income households being the norm these days, many folks don't feel the need to provide for a spouses indefinitely. However, they would like to facilitate a certain ongoing lifestyle for their loved ones. Now, I'm going to stop here without a question, John, and say this is one of those things right here that the small business owner needs to think about, okay? Because one of the things that you and I talked about early in this series was most of our small business owners have most everything tied up in their business.
Right.
Their house, their cars, their credit cards, all the things they do. And when you look at this particular thing, think about what comes next. Listen to what we're doing here. Because examples may look something like this. Cover personal final expenses. That's important. Pay off the mortgage balance because that house may be in that business. Well, now the breadwinner's gone. Wouldn't it be nice to know, hey, the house is paid for? Provide a lump sum for the children's higher education. Just paying off the mortgage and providing that lump sum for the children for the surviving spouse is going to be a huge debt relief, don't you think?
Enormously.
And that's what this says here. And provide a transition fund of 50% of salary until the youngest child finishes college. Okay? So let's look at our example again under the specific objective approach. Okay? We still have the head of household at 45 years old. That's awfully young, guys. We're looking at an annual income of $85,000 and 2 children, the youngest being 12 years old. Okay? So we've got a lot of raising children left to do here. Specific objective death benefit calculation. So personal final expenses, $35,000. Pay off the mortgage, $215,000. Just providing, and then you provide the lump sum for the 2 children. And just paying these 2 off, like I said, is going to be really great for the surviving spouse's income. But you're also going to be able to provide, you've got $80,000 in college money. And I know that there are a lot of people saying, if I'm going to send my kid to Dartmouth, that's not going to be near enough. But we're using examples here.
So these numbers can change.
Absolutely. And later you'll see that. And to provide a transitional fund of 50% of salary until the youngest leaves or finishes school. And that's $85,000, 50% times 10 years. That's $425,000. And so what you're looking at there is a $755,000 total death benefit required to fund these objectives with an existing coverage, because a lot of people have a term life policy sitting out there when they've got kids this age and they're in business. Wouldn't you agree?
Mm-hmm. Totally.
And so the additional coverage you might be looking for is about $500,000. Does that make sense?
Yep, 100%.
So let's look. It's important to consider the impact on a family in the event of the loss of either parent, both from an income replacement perspective and or a specific objective approach. What do I mean? Well, consider the situation of a couple with one earner, a full-time home and a full-time homemaker. What type of expense would be involved in replacing the contributions of a homemaker to the family? Trust me, it's more than you might think. The need to hire functionaries to replace certain duties may expose the sole earner to significant financial pressures, and that's no kidding. Potential household expenses, could be full-time housekeeper, cleaning service, laundry, dry cleaners, a lawn service, daycare, tutors, Uber drivers, etc., etc. Trust me, as a single father raising 2 children as a young man, all of these things are real. And we've seen There are several methods of calculating life insurance policy death benefit amounts for survivor income based on personal objectives. In addition to multiples of income and specific objectives methods, Turtle Creek Financial Group associates have access to very sophisticated planning software. These resources can provide an in-depth analysis of income replacement goals, short-term and long-term, while taking into account inflation and other factors. In addition, we have resources to provide guidance on topics such as, like you asked, actual college costs based on specific schools and resident status. And those things your resident status alone, for those of us out there that have gone to college, we understand that resident status can make a big difference in the cost of your education. Wouldn't you agree?
I would. Now, can I jump in here with another question?
Yes.
Because this might be going off course, and feel free to just say, hey, you're getting off on a tangent there.
No.
Hypothetically, then, because I remember we talked about key employees and retaining those key employees. Is this something that the business can purchase on behalf of an individual in order to retain that employee so long as they work with the business?
Absolutely. This is one of those things where you want to recognize, reward, and give opportunity to in a time frame to basically perform for you over a period of time. And what you're doing in that is you're allowing this key employee to benefit in such a way that other companies aren't going to be able to compete with, because having 4 weeks vacation and a couple of thousand more a month doesn't even compare to what we're talking about here. Would you agree?
Yep, totally.
So, because when you go home as a business partner or as a key employee and you say to your lovely spouse, honey, you're not going to believe what they did for us today. The minute that you share this information, mom's married to this business.
Exactly.
There's nothing more important to the mom of the house than security. And this is going to provide her with, wouldn't you agree, a huge amount of security, not only for her husband and his worth at the business and his longevity there, but for her ability, if something tragic were to happen, that she's got a plan and she's covered. And so are her children. So absolutely. Great question. After determining how much is enough for your personal situation, you must determine which of the issues are short-term concerns and which are long-term priorities and plan accordingly. And really, the next steps is just to acquire the appropriate amount of life insurance for income replacement for you and your family. And what they are is to provide the latest statements on any existing permanent or term life insurance for your family or business. Determine appropriate coverage levels for the short term and long term within your premium comfort levels. And apply for desired life contracts to confirm you are eligible for a contract. A simple online application is all that's required in most cases. But most people don't realize that before you go to all this trouble, you need to know if you can qualify. Don't you? Wouldn't you agree?
Well, I was just going to say that I noticed that it's an application, not just a transaction.
No, it's not a transaction. You are entering into a long-term relationship here. And that relationship can be, as you had said before, John, it's not just with the company that you may be insured by, but it's also the employer that may be providing this to you. I mean,
right.
This is a huge opportunity for young men and women doing business startups and partnerships to look at something and say, hey, these are things that we need to look at because these things happen every day. And, you know, so the ability for the business, like you had mentioned earlier, to pay for this is a lot less strenuous than it is for someone to go out and purchase this on their own.
Well, I think that's where it can really get exciting from an entrepreneurial standpoint, especially for that small business that doesn't have $25,000-$30,000 just sitting around to issue bonuses or even to raise someone's salary, because then you also incur payroll costs. It's one of those other benefits, not to use a cliche word, but one of those benefits that can be very effective in creating a little more stickiness to that employee.
Right. Basically, what you're doing by providing something like this is you're providing golden handcuffs to that employee by linking him with this to the company for anywhere from 5 to 20 years. And you are putting business continuity to work with money at work for your business with this key employee. And it's a win-win situation. Just think about this. Think about when you talk about buy sell, if you've got an employee and he's been there 5 years, you've decided to do this for him, and in 3 years, or let's say in 5 years, you're planning to exit the business. One of the key things that they're going to be asking you as the existing business owner is, what's our risk here? And how many of the employees are we going to lose as a result of you leaving? Well, you say, I don't think we're going to have a real big problem with that, because our key employee, John Beeman, we have him under contract for another 5 years after I leave. So the key employee, the guy that's doing all the supervising, he takes care of the vendors, he takes care of the employee and the employee morale, he is the face of the business to our clients, is going to be here for another 5 years. So your transition period should be very smooth, and the continuity of being able to maintain the existing account should be no risk.
So speaking of risk, that's a perfect segue. Couple of examples maybe of someone or a business owner, a type of business, so on and so forth, that this would be a great fit for, and maybe one that wouldn't be such a great fit. So kind of here's where I'm going. If you work in a very, very dangerous industry and there's a very high risk of injury, you probably really need it, but it's probably going to be pretty dang expensive if you can even get it. Whereas if you're working in something that's a little more of a safer environment, maybe say a boutique retail store owner, where you're not really playing with blades, you're not really having to worry about getting squashed by a 5,000-pound piece of equipment. Can you elaborate a little bit on some of the really good fits for this?
Well, let's look at high-rise crane operators. Okay, that's a dangerous job.
Yeah.
Okay, it really is. But there's no reason that you won't be able to get that. Now, you may be rated a T2 or 3, meaning second or third tier, because of the risk. And all that really means, if your health is good, isn't that you're a health risk. It means that you are in a dangerous profession, and the cost of insurance may be more. So in order to get, let's say, instead of to get $1 million worth of coverage may cost you 10 to 20% more in premium than it would somebody that, let's say, is an IT guy that's going out for one of the IT companies to take care of their clientele in different locations, because they also fly on planes and go nationally to here and there. So there's risk associated with just about every profession on some level. But let's be honest, you pay for life insurance with your money, but you get life insurance with your health.
And that's where a lot of it comes down to your individual choices that you make outside of the business as well. If you're neglecting yourself, you're not getting a decent diet, you're not getting decent sleep, you're not getting a little bit of exercise, you're putting yourself behind the 8 ball.
Well, you are. And I'll tell you something else that might inspire a couple of people, and that is that with a lot of insurance companies today, if you will stay on a good, healthy regimen, and that doesn't mean you've got to take videos of you working out and taking vitamins in the morning. What it means is, if you'll go get a physical every 2 years and you'll submit that, a lot of times they will give you credit for that in cost of insurance reductions, because they know you're taking care of yourself. So there are benefits to doing, because guys, most men, I can't tell you how many men I've talked to, business owners, key employees, and just the layman out there. I hadn't been to the doctor in 10 years. That's not good. You need to have a relationship with your medical professional.
And, and if I could just jump into, that's where it all comes back to business again. Not to always put a dollar amount of everything, but you kind of do need to as a business owner. It's not a tough guy thing. It can be bad for your business because you're increasing your costs by not doing something like that.
That's correct. And it may be that you find something that is very treatable early enough to where it's not something that could be terminal. Does that make sense?
That does. Because once you get to the terminal point, you're really not going to have a legitimate shot at getting a good life insurance policy, is my guess.
That's correct. Well, let's look at one more business benefit for the small business owner. Let's say that the small business owner didn't sell, or he did sell, doesn't matter. But the key employee has run his course and he's fulfilled his duties and he's fulfilled his time, and it's time to transfer this policy to him from the vault in the office that you paid for, because there's been no tax benefit for paying for this. Because if you're paying for it through the business, a lot of times what business owners will do, it's his personal policy, but you've bonused him the money to pay for the policy, and you've bonused him what it would take to pay the taxes on it. So you're invested in this with him.
Exactly.
Okay. But now you're going to transfer it to him, and that equated to about $200,000 that you invested in this employee. Well, when you make that transfer, he gets this gift tax-free. You, on the other hand, get a $200,000 tax write-off immediately.
And this is where you need to know as
an asset.
And this is where, as a business owner, you need to know money, how it works, how the regulations work.
Absolutely.
And they all play together.
They do. And there are documents that, you need to execute as a part of doing something like this for a key employee. But when you talk about this particular issue, which is income replacement, it does marry in, very good catch on your part, on how it would help with a key employee and why it's attractive to that key employee to have, for the key employee to have this, because it is instrumental in providing a future, because there are other assets associated with a lot of times policies that we look at that you and I haven't even mentioned here today.
Yeah, I can only imagine. Hopefully a few things you might elaborate on parts 4, 5, and 6.
Absolutely. I think we're going to look at retirement income in the next visit. And you are going to be blown away by what we're going to look at, because there are two types of retirement, and we're going to look at both. There are actually several types, but there are two main types of retirement. We're going to look at those, and I'm excited about being able to share that with you. John, it has been my pleasure and my privilege to be here. Hopefully I've been informative to you and to those that are here and will hear this in the coming days.
Absolutely, Bruce. Thank you so much for taking time to share your knowledge, your insights, a few action items for small business owners, what they can do, how they can use it. It's applicable and it's needed. So thank you very much. I really appreciate it.
I appreciate it. Thank you so much. Have a great afternoon.
You as well. Stay safe, stay blessed, and we'll talk again soon.
Absolutely. Bye-bye. Thank you, sir. Bye-bye.